We've got some big news here this morning coming in, and that is, of course, unemployment claims as well as services PMI. It is a loaded morning. We also got ADP non-farm employment change, which came in super low. And if you weren't here yesterday, guys, we didn't need any more poor jobs data. We definitely did not need any more cool jobs data. Things are about to get interesting out there, guys. I'll tell you that. So I've been in the camp of soft landing, soft landing, soft landing, right? Which I wouldn't say I'm no longer in the soft landing camp, but I would say I'm getting tested here. Because if jobs data keeps coming in this bad, we got to seriously reconsider what's going on here. Some of you may already know, but if you don't know, I was long the S&P 500. I bought the dip, and it ended up being one of my better trades this year. That being said, when price broke through this level of support, I got out of the trade. I stopped out. I trailed out of my position. And, you know, here's the tricky part about this week, guys. Jolt's claims, well, actually, Jolt's ADP claims and non-farm payroll, okay? That is the jobs data that is coming out this week. So far, guys, we've gotten through 2 of them out of the 4, okay? And guess what? Bad. We haven't gotten to this one, but it comes out in 10 minutes. And we've got these 2 to go. Guys, this is a little bit nerve-wracking. You don't want to see, we had a long conversation yesterday on stream about how you basically don't want to see the jobs market slippery sliding quickly in front of the Fed cutting rates, because it takes the thrill out of the rate cuts. Rate cuts are only good if the economy is okay going into them. And so far, not good, right? Can I get a sound effect for that? Hold on, I'll find this. There we go. Not good. Not good. And we got 2 to go. But they both missed. Both of these numbers so far have missed. We got unemployment claims coming out today. So, Nick, what are we thinking here? Well, here's what I'm thinking. The Edge Finder no longer has bullish setups on the indices. A number of factors got me out of the trade. Price action breaking through the structure that I had marked here was a pretty quick one. But guys, we're looking at a situation in which this is looking rocky. You've got oil who've just fallen off a cliff, which is showing signs of potential global recession. You've got jobs data rolling in just week after week after, or like weakness after weakness right now. But you might say, well, Nick, didn't we want weakness? We want a weakness so they would cut rates. Yes, but we don't want rapid weakness. What we're getting here today is more signs of, more weakness than we thought, right? So I took profits on some of my indices trades because I'm not feeling so comfy anymore. So what am I in? What am I looking at? Well, I am still in a gold position, which gold is killing it today. GLD, I'm in a GLD long position, which this one has recovered a little bit. And I'm also in the Russell, which, you know, the Russell's surviving here this morning, but we'll see. I'm going to potentially trail out of this trade too if we break through the support. We're sitting at support right now. If this starts sinking lower, guys, time to get out of the Russell, and that would put me at no long positions on the indices. Now, hear me out, because I am not saying that I am suddenly shorting or super bearish the NASDAQ or anything like that. I'm not saying that, because right now on the Edge Finder, if you take a look at, let's narrow our focus for a second to indices, okay? So with indices, we've got a -3 for the S&P 500. We got a +1 for the NASDAQ. Dow's getting a +4. Russell's getting a +2. So long story short, I have gone from bullish on the indices to strictly neutral on the indices. What that means for me is no rush to get into indices positions at this moment. Now, if you'd listened to a few, the last couple months, I have been indices city, right? I've just been constantly looking for buys on the indices. I've been very bullish on them, but we've had a really strong year. I'm still overall thinking, okay, stock market can keep going, but what do we need for that to happen? We need this section, guys, to turn blue. Okay. Long story short, on Friday, we need to see the unemployment rate, the percentage, to not go up. And we need employment change, or NFP, to be strong.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Just about 8 seconds to go on unemployment claims this morning. Let's see. All right, unemployment claims, dollar index, bit of strength there would suggest maybe unemployment claims were a little bit better than expected. Let's see. Forecasting for 231,000. 227. Okay, so they were lighter than expected. So that would be considered better than expected. Market's going to like that a little bit. Dollar index bouncing a little bit off of its lows. But it's not a huge change. Not a huge change from what was forecasted. We're getting 227K. It's still pending on Forex Factory, but 227K, that puts us right around where current things are, or where expectations were. Let's switch back over, see what's going on here. Forex Factory's having a field day this morning. There we go, 227. So not much of a beat or miss. So not going to cause a huge volatility spike. I think that kind of defaults us to where we were looking. ADP, jolts, looking a little bit sketchy here. NASDAQ and S&P. S&P is pretty much flat on the day. NAS is slightly lower. The Russell's doing okay. Russell is one position I'm still in. I'm also long gold. Oil bouncing about 0.94% here. Silver up about 1.6% this morning. Take a look at some currencies. Euro dollar hit support, bounced. I was watching Euro dollar, but unfortunately at the time it didn't have a setup on the Edge Finder. Now it does, I believe. Yep, Edge Finder got us set up with a bullish signal here. So looking at, for me, I'm looking at Euro, Kiwi, and Pound, all for possible long setups for the currency side of things. Nothing on Pound. Euro, I like if it comes down to this area, 1.1039. I'm interested in that. Dollar yen, still look at that. Yen is holding strong right now, pushing dollar yen lower. NZD USD. Also watching this one for a possible retracement down to the 38.2% retracement. So I like this. I like these setups, but they're not quite at places where I can execute any positions. Gold is on all-time high watch right now. We're pretty close. If gold has another squeeze higher here this morning, it is possible that we could put in a new high here today, which would be great. I'm looking for a new high on my position in order to trail stops. So if we can take out these highs, that'd be great. But take a look at the 4-hour chart, get a little closer view on this one. 4-hour chart is testing. It's getting close to resistance. but man, this has been a very consolidation heavy last couple, weeks really, or days. You could see gold finding heavy resistance right around the 25.30, 25.25 zone. Like this area, big resistance. This area, huge support. So 24.75 has been a pretty good level of support for me now, because I am, in my position. I like to trail stops. What I'd be looking for is something like this: a break through the highs, at which point any sort of higher low, I would get the chance to move my stop loss into profit. We could take a look at the P&L. I'll pull up GLD. So this is a position that I'm in. GLD is up $850, which is not a huge position for me, but still good money. $850, we'll take it.
Well, I'm currently in a Aussie dollar long, so I'll probably have to pick that one. Yeah, I'm looking to buy this one. I'm looking for a swing back to resistance around 0.686 here. I'm very bearish on the USD. We might see a bit more strength, but of course we'll see what happens with NFP on Friday. But I'm looking to try and take this one higher. This is my first area I've marked out a couple where I'm willing to buy from should we pull back a little bit deeper. But we have seen a nice reaction here. So I've hopped in. I was a little bit late to the party. I was meant to enter yesterday, but I missed the entry. So I entered this morning, and price is still roughly around my entry. But I do see a lot of upside with this one. And especially if we can hang on to that daily level, and especially if USD does keep falling. So I'm keeping a close eye on the dollar. The lower lows and lower highs still look pretty intact to me. So I'll expect this one to come back to that low, and hopefully that can help out with my Aussie dollar position. But if I had to pick a pair, it probably would be the pound trading, which is some longs in Aussie dollar.
Okay. I actually have an interesting thing that I'm looking out for on NZD USD, which is, not the same pair, but similar. They typically do move kind of in the same direction. If we do see the Kiwi dollar move lower, I was looking at that as a possible long entry, but seeing some dollar weakness coming in here this morning already. So may not get the chance, may already be pushing higher. And I imagine that would also positively impact your Australian dollar trade as well. So is your thought process, you do typically like to trail stop, so you're looking for like a break through the highs and then like continuation play, is that right?
Yeah, exactly. There's some resistance above us, some of there as well, but I don't have a target per se. I have where I expected to get to, but I will be trying to trail, and I'll be using discretion. So it depends how price is moving, how aggressively I will trail. If it's not looking too good, I might be a bit more aggressive. If we're seeing really big candles, then I might give it a bit more room to breathe. But yeah, I will be trying to see how far I can take it.
Okay, fair enough. Chart of the day: Australian dollar against the US dollar. I like that. Marco, chart of the day. What's your favorite one today? Current best setup or idea?
Yeah, so for me, it's gonna be the Aussie and the Japanese yen, which is currently producing a very clean, I would say, a descending channel. So it's consecutively breaking these lows according to the way that I look at the market. And the more breaks of the lows that happen and no breaks of the highs, the more likely it is for the price to actually start an uptrend. So I'm very interested to see this reverse to the upside. I'm expecting something like this to happen pretty soon, and then I'm going to be looking for buy setups. So just by looking at the patterns that are being printed right here, the price is telling me that it's very clean and that it wants to go up. So that is going to be on my radar for today. And the other JPY pairs as well. I think the JPY pairs currently look very clean and active. More active than the US dollar pairs, but this one looks the best out of all three. So I have EJ, AJ, and NJ, but AJ is printing the cleanest formations.
Okay, yeah, fair enough. I think the yen pairs have been really interesting, actually. I was looking at USD JPY this morning, and we've had some more. I'm sure you guys, everyone remembers here who's watching the big slide that we've seen in some of the yen crosses, which largely was triggered by last month's NFP report. Last month's NFP report came out of the US very, very weak, caused a lot of fear. Long story short, the yen got really strong, And what's a bit concerning as we go into this week's NFP is we're seeing some of the same worries start to resurface. Basically, the worries being the US labor market is looking pretty rough. It's starting to show some weakness. We'll get more data, of course, tomorrow with the next NFP report. But that definitely concerns me because it's like, we have not really recovered at all from all that big slide. I would have thought that we would, I think I discussed with you guys, I thought we would see a little bit more of a gradual return. But the problem is we've seen more data come out that has been more evident of weakness in the labor market. So the dollar yen continues to drift lower. But in terms of a price action standpoint, I'd say the yen pairs are producing some really clean kind of candles here on the daily chart level, some pushes lower. And I think Miko, the last time we spoke, you were looking at some yen crosses on the bearish side on retracements. Did you ever look at any trades, or are you still watching stuff? What are your thoughts on the yen?
Yeah, so I'm still looking at them. I did take a New Zealand yen, excuse me, a New Zealand yen short, roughly around here. I did get stopped out on that position, a little bit too early to the party. But now that we've seen some momentum, as you just discussed, I'm starting to be interested in looking to short them. New Zealand yen, not so much in particular, but I'm really liking Euro yen, which you had on your screen. Really nice breakout to the downside. So this has just become a lovely level of resistance to look at. Should we revisit? Hopefully a retest. And if the trend really wants to continue, because we had such a big sell-off and prices tried to fight higher, but it's really struggled. And now we're seeing the bears step back in control. That could take us back to the lows here. So should I get the retest them after, it could end up being a really nice trade and possibly another swing back to that low and maybe beyond as well. So I still like the yen pairs to the downside. Maybe entered a little bit too early there on New Zealand yen, but now we're seeing some nice momentum. I'm interested again, but I would say Euro for me looks the best of the bunch.
What I find interesting about the yen crosses too is, Marco, I know you've talked often about like when you do see these big V-shaped movements, a lot of times they are kind of like, it's like a big fluke and then it kind of continues in that direction. What is interesting this time around, when we look at the yen crosses, is you saw this huge slide on things like pound against the Japanese yen and Euro yen, like Miko was just talking about. You saw the retracement, but to me, on price action basis, if you've got like some lower high forming here, or maybe just in a simpler case, you're starting to see that rally fall apart, just from a psychological standpoint, people are probably shell-shocked by how fast that thing can move. And now they're seeing, okay, it's breaking support, as Miko just mentioned. We're breaking through key levels, that the rally seems sort of showing some weakness. And I can imagine, with people seeing how fast this thing can move to the downside on weak data, if you get an NFP report that comes out weak, I actually think that the risk to reward on the short side makes a lot of sense. So like if you're, let's just say between now and NFP, you get kind of this move and you say like, okay, I think that if we get a weak NFP number, the risk to reward is very good to the downside, and you're willing to, put a stop loss that's a little bit further away to account for possible slippage that could happen on FP. If you get like a repeat function of last month, you could see some very aggressive swings on yen crosses. Are there any other yen crosses that you have your eye on, Marco?
I did have my eye on all three of them, but so basically all three of them are telling me on the 1 hour that they want to go up. They were really struggling to go down, especially the euro and the Japanese yen. This was one of the cleanest descending channels I've seen, but then it did fail lower. But yeah, just by this momentum, it's telling me that it probably wants to reverse maybe in the short term. And NJ is telling me pretty much a very similar thing. It did have this nice push down. It did take a short here, but got stopped out for a 1% loss. And then the price started pushing up with some bullish momentum. So I would say short term on the 1 hour, all three of them are gonna, not that they're gonna go up, but the probabilities are telling me they want to go up. So maybe on the daily, this is just like a small correction before the drop continues. We will see, but I'm definitely interested in buy setups on all three of them.
They're definitely, all the uncross is just moving very aggressively. Next question for you guys. I want to go Miko on this one. So gold and silver kind of holding their own. I mean, despite the stock market, which has been sliding a little bit here, you've had gold is still near the highs, silver not quite so strong. But what are your thoughts on gold and silver right now? Do you have any positions or ideas on these ones?
Yeah, so gold is looking really strong. I actually missed an opportunity here yesterday. But yeah, the market is still holding level after level. It's kind of like stepping stones. We've got resistance there, we broke through that. Resistance there, we broke through that. So I'm expecting the same thing. Resistance here, I'm expecting us to break through that. I'm still seeing consistent higher highs and higher lows. Higher time frames still look relatively good. It's a little bit slow, but the key thing is that major support is still holding. So that's the key thing to take away for me with gold. Yes, we have been sideways for the past kind of 1 or 2 weeks here, but I wouldn't be surprised that we see a big breakout soon. I don't know, maybe NFP could be the catalyst for that, or maybe sometime in the near future, but I would expect more upside. So now that we've had a successful bounce off the low there again, I would say the opportunity now would be the retest of the high. We've come back, respected on numerous occasions. So clearly the market's quite interested at this price around 25.30. So should we get a nice break of that, a retest, I feel like we'll probably see some more, see some higher highs in the future.
Yeah, it's looking like it wants to try at least. We've been in that consolidation zone for gold for the last few weeks here. Just can't seem to break through that 25.30 level or the 24.75 level, but we will see. Marco, thoughts on gold or silver?
So for me, gold is kind of struggling to go up. It's not the sort of momentum that I want to see on the daily chart. So it is moving up, but again, each time it breaks these major highs, we're getting a lot of weakness and just not getting the sort of momentum that I want to see. But then again, gold does like to move in these more choppy patterns. So I would say there is more upside possibility, but not a lot. Just by gauging the momentum, I'm not seeing like huge amounts of momentum. And silver looks even worse, if I remember. Yeah, silver just looks very flat, corrective, and range bound right here on this area. So I'm not really seeing a big bullish case, but maybe a bit more upside. Again, I'm not seeing that sort of strong momentum that I want to see as a technical trader. So yeah, just kind of struggling to go up.
Yeah, it's almost like it's in like a grindy, slow upward trend rather than the more aggressive and clear uptrend that we saw earlier in the year. There was a period of time where, you can see it on the far left hand of your screen there. You had those like clear, massive upward movements there, and then we've kind of fallen into more of just a choppy, grindy upside move, which, for my style, and I imagine for you guys as well, like the more decisive, super clean moves one way or the other are a little bit easier for me to trade than the choppy ones. When it's choppy, it's
for
like,
sure.
Especially with trailing stops, Miko, like, oh man, trailing stops plus choppy markets are not always the most fun, because you're sitting there and you're like,
Nope.
Okay, we're getting a little bit of move, trail a stop, and then it, comes back down, just normal chop takes you out, which can be very frustrating. But it's all one of those things. I think that with your exit style, which is one of my favorite conversations in trading, I'm always interested in like how people choose to exit the market, because, there's a million different ways to enter the market. I personally think the concept of entries is overrated massively. I think exits are far more important personally, because how you choose to manage a winning position is so huge. Like if you enter this gold move, this is cherry picking the perfect one for, Miko and I's type of style, where we're trailing stops indefinitely and we don't have targets. Obviously, in this case, everyone's going to say trailing stops are the best. And then people are going to look at this period of time and say trailing stops are the absolute worst, because now you can never, everything is just giving you a small win or a loss, and you're never capturing the full move. So I think I just want to give you guys, I know we've talked about it in the past, but I'm sure there are new listeners who might benefit from this quick question I'll have for each one of you. Miko, I know you use trailing stops, but can you give us any information just on generally how you choose to exit the market?
So yeah, well, I used to use finite take profits in terms of I would target a certain level, place my take profit there, and then wait for the market to take me out. It's either that or break even. But looking back at my trades, there are, well, certainly last year there was some big wins on the table, which I left, which could have meant I made bigger returns with taking less risk. So my plan was to change that up and looking at trading stops. And since then, it has been a bit of a ride because you've been adjusting to it. But I would say my biggest takeaway from using trading stops is that you have to really understand what condition of the market you're in, because like you just said, when the market is trending, trading stops are great and they can really make you take advantage of the move. But if you're trading within a range, it actually makes more sense to probably not use a trading stop loss and use actual finite take profits. So being very aware of the market conditions will actually help you utilize the trading stops a lot more and really maximize your exits and your profits.
Yeah, and I got to say, I think that the one that's always tempted me, I've never made the shift to doing it myself because I've got my system, I know what works for me, but the middle ground seems to be like taking partials, because then you're like taking profits in pieces. You're still letting the winner go if it wants to keep going, but you're also locking something in. Taking partials is not the holy grail either, because there's also times where you take partials way too soon and then the last remaining runner is so tiny that it's like, okay, this is not. So there's pros and cons to everything. There's no holy grail. There's always going to be comments who respond to you and say, oh, well, you should have just done this, or you could have done it this way and it would have worked better. But markets change, and dynamics, when they change, suit different strategies better or far worse. So that's the tricky part about trading, is nothing works perfectly all the time. All right, let's see what we get for services PMI coming out here in just a moment. Dollar index not moving too much. Euro dollar moving lower. Gold flat here. That would suggest maybe a, as expected, services PMI. All right, 51.5 came in pretty much exactly in line with expectations. So no real threat here. No real huge boost either. 51.5 is modest growth in the services PMI section. And hey, that's not so bad. If we take a look at the reaction here in the markets, you can see it's not a huge one. You've got SPX 500 just moving up a little bit here. NAS, same thing. Dow Jones also moving up. Dollar index modestly higher here as well. Euro moving lower, pound moving lower. And I like this setup because there's a couple charts that I'm interested in on pullbacks here. So let's take a look at our main chart view here. So we've got SPX 500 here moving a bit higher. You've got NAS up 0.67 here this morning. So we'll see where that one ends. Russell's up 0.35. I'm still in this position as well. So watching that. Gold, not loving that number. Gold bulls would kind of like to preferably see, weak dollar news, which would be weak economic data. So dollar index all over the place here this morning. A bit of conflicting data. You had unemployment claims neutral, services PMI, let's call it neutral, and the ADP this morning, let's call that bad. So I wouldn't be surprised if by the end of the day, the dollar index is still a bit lower than where it is currently after the dust settles. I would be surprised if it's up big time today. If the dollar index is up a lot today, that would surprise me because you had a good bit of weak data this morning. 51.5 is about what was expected. So not a huge move there. Indices up a little bit here. Let's see what else we got. Oil up on this just slightly. Look at that. Oil spiked on that and then came back down. That's interesting. Yields bouncing on this. So, a little bit of optimism there on the services front. Let's take a look at some currencies. So I actually want to look at the euro because I was marking something up just before I joined stream, guys. Check this out. So I mentioned that I was looking for some euro longs against the US dollar. But I was marking something up because I was like, okay, where would I put a stop loss in this chart? Probably here, right? Just below that structure low. But I started thinking about it. I was like, okay, so if I'm putting a stop loss here, the other spot, the only other place that would make sense to me would be like down here. So I'm not going to put it down there. That would probably be something where I try again down here, right? So my first attempt on the long side for Euro USD would be a move probably down here. But I was thinking about that. I was like, do I just want to buy it right now? And this is a good example of why the answer to that would be no, because I like the better risk reward by being patient on this. So what I mean by that is that if I buy it right here, my stop loss is in pip format, 68, 70 pips, right? But if I wait and do see a pullback, if I'm patient enough to wait for a deeper retracement, my stop loss goes from 70 pips to 26. Now, the risk that I'm taking, quote unquote, is not getting in on the trade and it just rips without me. But that's what I'm willing to play that game. So I am looking at the euro for a possible buy, but I've got to see it come down. I've got to see it come to me. I'm not going to chase it.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.